Hello everybody, welcome back to my YouTube channel. My name is Notando and I make videos on construction, lifestyle and travel. If you're new here, welcome, and if you are a returning subscriber, thank you so much for tuning back in. Please do not forget to like the video. So on today's video, we are going to talk about how to do a cost report as a consulting quantity surveyor and why it is important to do this. Now, before we dive into the video, I just want to highlight the differences between a consulting QS and a contracting QS and their roles. So with the consulting QS, their role entails doing feasibility studies, being very involved in the pre-contract stage, working very closely for the client, and also setting the budget before the project actually goes on to construction. They are then also usually involved throughout the life cycle of the project. So they'll be very involved doing the feasibility studies, the BOQs, the budgets, rate comparisons, all those things, and then they'll also monitor the cost post-contract. Not post-contract, like construction and then post-contract throughout the life cycle of the project. Whereas a contracting QS is involved in the construction phase of it. So they then bid for the project for their contracting company, and if they win the tender, then they'll be involved in monitoring the costs, maximizing profits, and making sure that they deliver the project within the budget with maybe some profit for their company. So that's what a contracting QS is usually involved in. They're involved in the construction phase of the project. Really, both have similar goals in mind, just for different parties. The contractor QS cares for the contractor, the client QS cares for the client, but also the contractor, because everything needs to be fair and square. Nobody should be taking advantage of anybody, and everything should be well documented. That's what the role of the two QSs is. But in this video, I'm going to talk about cost reporting for a consulting quantity surveyor. Just so we're clear, because I know with QSing, it could be 5 QSs sitting in the room, and all of us are not speaking the same language. Someone is in finishes, someone does fit out, someone is part of the tendering. So I know that it gets very, very complex. I can even see with my friends, sometimes I can't even call my friends and ask them for advice, because this one does something totally different to what I do. So I know that with QSing, it's very, very complex, and this video might be helpful to you depending on where you are in your life. So I'm hoping that it will be useful, but yeah, let's just get right on into it. So let's start with the basic. Obviously, we need to know the definition of what cost reporting is. First things first, cost reporting is the process of tracking how a construction project is performing financially. As a consultant QS, I use cost reports to keep the client updated, manage risks, and help guide decisions. It's not just numbers on a spreadsheet, it's about accountability, transparency, and control. So you need to be on top of your projects. Sometimes it gets very administrative and tedious, but every single cent or it needs to be accounted for. So you need to keep all the delivery notes together. I remember when I was on site, you'd have a delivery note recon, you have the equipment hours, you have daily diaries from what the labor is doing on site, you have CEs or compensation events or variations depending on what contract you're using. You need to monitor all those changes, any design changes. You need to get those drawings in, remeasure, make sure the costing there makes sense. If the contractor then has to bid for something that was not in the original scope of works. So there's a lot of monitoring of costs and changes that is very, very important, ensuring that you can advise the client accurately and accordingly, monitoring all these changes, any losses on site, who the loss belongs to, all of that. It's just, that's what cost reporting is about. So your cost report will usually have a structure of where are we, how much are we paid, what is our budget, and where are we currently. Number 2, you'll then have, these are the changes that have been implemented, this is all the documentation that goes with it, and here's a provision that I've allowed for, looking at what's going on site and how we might end this project. And then you have a forecast that you need to produce. It's okay, I think based on these changes, based on how the project is going, based on certain design changes, this is the amount that we're going to end up with. Might be more, might be less than the budget, but this is what I'm forecasting on. And then you also have, let's say, a cash flow that then shows the client what to budget every single month. This also takes into account the trend that you've seen, what the contractor has submitted, the changes that have been approved and not approved, the backup that the contractor has also submitted that goes into your cash flow. And then this report then informs the client what to do next, month to month, or depends on obviously the company that you work for. Usually they don't have to go with this. This is just you giving them advice on, this is what I'm seeing, and this is the trend that I'm seeing. This is how much you must budget for next month, and this is how I think the project is going to end. And then the client can decide what they do with that information. That's what pretty much a cost report is. What I've also learned is that forecasting gets better with time and experience, obviously, because as a QS you get to see what happens on site usually. And you also get to study what your site is like, what the issues they usually encounter are, and where you can recover some costs, or maybe where you're going to incur some costs. So that comes with a lot of practicing. What's also very important about a forecast is that it shouldn't be too high and it shouldn't be too low. It should be, if you can get it, then you're a great QS. But that can be quite tricky. But that's what a cost report essentially is. The reason why a cost report matters so much is that it keeps your clients informed about the budget, where you're likely to end up, and how to budget their own money for the project. It keeps them informed, and it lets them know how their money is being spent. Do they need to intervene in certain parts? Is there ways to mitigate certain losses that might be incurred? And is there a way to then recover certain costs that are lost, depending on who the burden or who the cause of the loss belongs to. Yes, it also, number two, it flags risks very early, because you're monitoring all these things, and maybe you have a provision of like, I really feel like we're going to go into the red with this because they're slow. Because you also look at the progress. You also look at the what is it called? The program and how that's progressing. And then if you foresee that this is going to exceed the contract term of the contract duration, you can then flag it to the clients and be like, progress wise we're not doing well, and I feel like this is going to start eating up into our P&Gs later on. Is there a way that we can mitigate finishing this project at that time and finish it a bit sooner? What are the issues in between when it comes to progress, even though that's not your role, but financially your insight on, or your input on the project finishing much later, or just looking at the trend at which the project is progressing, could be really helpful to the client. So then they can pull in some strings to then mitigate finishing much later, or then charging whoever needs to be charged before the project gets to that stage. So cost reporting also supports decision making. Usually when you have a cost report in, there's a design change that needs to be supported by the client, obviously depending on why the design change has to happen and why it's incurred. So when you have a cost report that has all the details about what happened here, what the costs are, were the costs analyzed, were the costs checked with market related rates, this then helps the client support a decision that needs to be made on accepting that variation or change in the scope of works. So that's why cost reporting is also important. Cost reporting also documents accountability, because everything is put together in a structured fashion and manner. You can see what the variations are, where they come from, who they come from, how the cost was analyzed, how we got to the final costing of the change. It then documents accountability, that you know that no, the reason there's this change is because a new drawing was issued, and because a new drawing was issued, it changed a certain thing on the project. Now we don't want blue skirting, now the drawing has red skirting, so that needs to be changed. So everyone who has contributed to that change in the documentation of a cost report will be accountable for their decision or for their contribution to that. So cost reporting also then documents accountability, who's responsible for what happened where, which then makes the project more transparent and clear, and everybody who's responsible for whatever role they have in any aspect that's gonna either cost or save money is then highlighted and seen. So it highlights and documents accountability. And there's a lot of signatures that usually go into approving certain changes. So if you're reporting monthly cost reports, that shows transferability, that shows where you are with the client, and then it builds that trust with the client that every single thing, every single month is looked at in this detail that the two parties have agreed on, which then could then progressively mean more work in the future. And yeah, so it builds that trust and investor confidence that, you know what, you're showing us where we are, you're giving us this advice, and you're allowing us to know whether or not we need more money or less money, blah, 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 blah. That's the good thing about it. All right, now that we know the importance of a cost report, let's go through the step-by-steps of how to do a cost report. Step number 1, you review the budgets. So you start with the original approved budget, right? You break it down into the different trades or different sections of the work sites. You break it down in however is going to be manageable to you. Some people have WBS codes, some people have trades. You break it down into, this is civils, this is masonry, this is tiling, this is blah, 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 blah. You break it down like that. Original versus actual. That's step number 1. Step number 2, you gather the actual cost due to date. So this is where it gets very tedious. You need an invoice for every single thing. If you're going to look at, let's say, concrete or tiling or whatever, you need to see that we bought tiling here, here's an invoice for it. The costs, the actual costs need to align with what the backup is. This also means you literally look at the P&Gs, the materials, the equipment, all of that costing, the actual costing needs to come through to be backed up by invoices. So you have, this is what the budget is, this is what your invoice add up to. This is the variance. Sometimes it will exceed, sometimes it will fall under, then you'll know what the variance is. Number 3, you then identify committed costs. Like depending on the contract, obviously some variations, you know that it was a go-ahead or it was a project manager who instructed them to do the work. So that cost is for them to have, but it's maybe not yet approved. You can include those and you can add them there as pending costs or costs to be done. You know that those are committed costs. That cost is going to happen whether it's gone through or not, whether there's an invoice or not. That cost it's now part of the actual costing of the project. Step 4, you need to update the forecast to completion. This is where now you put almost everything together. You have your budget, you have your current costs, then you have your pending whatever cost accruals that you need to think about, and then you'll then have your final costs which can then have your contingencies or your provisions or your what's gonna come out of the budget in that sense. So that's where you have then your forecasted cost, where you're like, okay, fine, I know that this is what we committed for this, but I do see that there's still that much to be done. Or you saw that the drawing changed for the 8th time, and the 8th now drawing has an extra building that was added to the end, and they remove the pool. You then remove the pool in the scope of your remeasures, that quantity, and then you add an extra room for the new building that's going to be constructed where the pool is going to be constructed. So your final forecast cost needs to be a realistic budget. So it's like a revised budget of where it's looking like the project is going. So you have a budget, variations, accruals, and then forecast cost. This is where I think we're going to end up based on all the information that I have to date. And then little down there you can have then, these are my provisions for what I think might change depending on market rates, depending on the pace of the contractor or the pace of how the project is going. This is where the savings I think we're going to make. That's what your final forecasted cost then will then entail. Your final forecasted cost needs to factor in inflation. If you're working with steel, you know that thing goes really fast. Like steel inflation can literally blow up the project so quickly. So you factor in inflation, factor in any potential risks, you factor in any potential future changes that you know of. Make sure that your final forecasted cost is as close to what you think the project is going to end at as much as possible. So you think of that when you think of your FFCs. You also do a variance analysis. I think that's where the changes come in. So you compare now budget versus actuals versus forecast. So budgets, we started at 5 million. Actual, we are at 3 million. Forecast, we are at 4.6 million. And forecast, we were at 7 million. And then you look at those variations. So you'll maybe have a column that highlights all the overruns no, we thought the building was going to have this many square meters of tiles, but because now we have an extra building, we're going to go up to that. We have accounted for this much wastage. This wastage was due to the incorrect tile being ordered, and because the incorrect tile was ordered, we then had to contracharge this specific contractor because it was their fault, so we can make a saving there for that money. So with this variance analysis, you're able to then see where the changes are, why the changes are there, are we going to have any overruns, and where we can recover the changes that are there. If then it was a change by the client, then it is a cost, we have to incur it. It is what it is. If it was maybe negligence or a mistake by the contractor, then maybe we can recover some of that cost because they decided to order the wrong strength of mortar. And if it's then a de-scoping by the clients, maybe then we can do a saving because we don't no longer need that certain type of paint for a certain room, which costs 3 times more than normal paint. So that's where your variance analysis comes in. This is where you're able to explain why there's fluctuations or different changes within the budget of the project. Are you still with me? I feel like I'm speaking gibberish. Oh my soul, am I speaking gibberish? I don't know. I hope this makes sense. It makes sense to me because I can see it. But it might sound like gibberish to you. If it sounds like gibberish to you, comment it sounds like gibberish. And I'll make another video with like a simpler way to explain it. And then there's cash flow tracking, like I mentioned earlier. So this is where you map up when payments are expected. This is where you'll have your monthly things. Usually you can ask the contractor for what their cash flow thingy is, but you can also have your own as a QS, where you realize that the trend is like this. You look at the changes that are coming through, all the accruals, all the pending costs. Then you're like, okay, next month this is what we're going to pay you. In November this is what we're going to pay you. In December this is what we're going to pay you. From all that information that I've gathered so far, and from maybe what you as the contractor have then said, this is what your cash flow is going to be. Usually you meet the number of the cash flow. Sometimes it exceeds a little bit, sometimes it goes down. At the end of the day, as a consulting QS, that decision is on the client and what the client needs or wants on. Yeah, so you can only advise and then give you advice about that. So this helps the clients also manage their monthly cash flow planning. They then know how much money to put aside for each contractor or each package that you have in charge as a QS. And then number 7, the final presentation. The final presentation, you just need to compile a report, which is what a cost report is. It'll have an executive summary. It'll have a budget versus actual. This is where we are. This is how much the budget is. This is how much we've paid to date. And then you can share it in a presentation or report back with like a review. Depending on where you work, some companies require you to have a cost report presentation every single month, where you sit with the clients, you tell them this is where we are. This is why there's major changes. This is why there's major losses. You can explain why this change is there. This change is due to A, B, C, and D. This change is due to, you know, and then luckily I don't have to do that. Oh my gosh, I don't like presentations. But when I was in contracting, you had to present your trade. Literally, you had to present the work that you're doing. So because contracting or buildings can be so complex, when you do a cost report, there'd be a different QS for each trade depending on how big the project is. So if you're in charge of, let's say, brickwork or masonry work, you'll then have to present on your trade and say, this is what happened this month, this is where we're losing money, they're doing reworks for this. Ooh, it was so stressful. It was so stressful. It was so stressful, oh my word. You must be consistent in your formatting so that the client knows that this is how your document looks like, what it reads like, where to go for what, number 1. Number 2, you must stay up to date. Don't wait until month end. So if there's a change that comes in, update it quickly. If a compensation event or a variation changes, update the cost as you go. This might be very hard to keep up to, but like this is advice just to help you not forget certain things that happen throughout the month. Add a narrative to the story. So numbers usually don't explain themselves enough. So if you can explain why the number went like this and then it went like that, that then helps you and the efficiency of your cost reports. So usually some cost reports will then have a comment on the side. It's okay, this went down because, you can add your comment that says de-scoped works, or works added or building needed gas stoves from electrical stoves, add some words to back up the numbers and to help the client or whoever's reading your report to know what happened and where that change happened. And lastly, you can use, obviously depending on where you work, Excel is very helpful. We predominantly use Excel, but I've worked with JDE, which was amazing. JDE was amazing because everything is automated in the system. Your accruals are put in. When you have all your invoices, you can put them in there. So the cost reporting system was more automated because everybody works on this specific system, which was perfect. Cost X as well was helpful. Build Smarts, I've worked with Build Smarts as well. So Build Smarts and Candy can be linked. So if the cost then comes in or the invoice comes into the accounting system of the company, that's then loaded to then match what your project has there, and then those things are then linked to your remeasures. And if it's linked to your remeasures, which are on CCS, everything was just so nice. Sometimes obviously there'd be areas where someone else loads an invoice into your projects. That's where you need to like remove or alert them with, no, this does not belong to my project. I don't know what this cost is for. Send it back to whoever that belongs to. But honestly, those automated systems were, but if you work, you can still do it on Excel manually. Obviously, if you have your register, your project register, your change registers, if you then have your invoices that the contract has sent through, you can still do the same thing, obviously from a manual perspective. So depending on obviously where you work, what your company software is, that's how your cost reporting will then be done. But yeah, that's pretty much what the gist of a cost report is. I feel like I spoke a lot of gibberish. I don't know why. I'm sorry if you don't understand, but I think one day when you've done the stuff and you've done a cost report, this will make sense to you. And the day it does, if it doesn't make sense to you, the day it does, please comment on this video and say it makes sense to me. And if it still doesn't, you can still comment on the video and say it doesn't really make sense to me, but I know that one day it will make sense to me. But yeah, that's the whole gist. So yeah, that's the full guide on cost reporting as a consulting QS and why it matters. If you found this helpful, please like the video and share it with all your friends that are in construction. And if you didn't find it helpful, still like the video and tell me that this was not helpful. Do better next time. I'm happy to have a more visual representation of how cost reporting works. If you want like a more tutorial, like step-by-step guide, I'm happy to do that with a voiceover and stuff like that. I know I don't usually do those type of videos, but for you I can do it. Especially if you work for a company that doesn't have templates or a structure of how a cost report to be done. I am more than happy to assist you with that. I do think I have enough experience from companies that have softwares that automate the process more easily to companies that do it a bit more manually. And with now my recent and very intensive experience in consulting, I also have that perspective of it. And also, if you want me to look at it from a contracting perspective, I'm more than happy to look at it that way. Just let me know in the comments. Yeah. Anyway, thank you so much for watching. See you later in another video. I hope you found this useful. Do not forget to like, share, and subscribe. And also, I would like to make this a series of how to as a QS. So if you have any other topic that you would like to know how to do an estimation, how to do a rate comparison, how to do what else isn't how to in QSing, how to do a payment cert, let me know in the comments down below and we can make this a series. We can have a how-to little folder, how to do a payment set, how to do a claim, how to do a compensation event, how to do a variation, how to write a contractual letter. There's so many things that we can discuss. So yeah, do let me know if you have any of those that you'd like me to go through, and I am happy to help you. Thank you so much for watching. I shall see you later in another video. Do not forget to like, share, and subscribe. It's very, very helpful. Also, I'm trying to get to 10,000 subscribers at the end of this year. That would be great. So y'all, I know I'm not consistent, so it's gonna be much harder, but like, it would be great to get to 10,000 subscribers. Yeah, so maybe you can help me with that by subscribing. Also, it's free. It's you don't have to pay for anything. You just log in and make sure you're watching from your own thing, and it's free. Yeah. Alrighty. Okay, I'll see you later in another video.